everyone. Now today we'll continue with the chapter number 2, that is basic accounting terms. In basic accounting terms, we already done with the most of the accounting terminology like assets, types of assets, liabilities. Then in the last lecture we discussed about the receipt and expenditure, that is called capital revenue and deferred revenue expenditure. Now in today's video we'll discuss about the basic accounting terms which we generally use maximum times or number of times, like profit, loss, gain, total expenses, total revenue, cost of goods sold, purchases, purchase return. These terminologies are maximum used in accounting process. So let's continue with the first slide. So here is the first slide. In the previous slides, we already discussed number of accounting terminology up to the point number 9. Now the 10th point is expense. What do we mean by expense here? It is the cost in producing and selling goods and services. So whatever the producer is expended on producing the goods as well as the selling goods and services is called as expenses. So expenses include like cost of goods sold, expenses paid on producing and selling of goods and services like salary, rent, commission or depreciation. So these all items are related to expense. Now move to the next one, that is called income. Now let me make you clear here that income is different from revenue. First I will discuss about revenue, then second the difference of revenue and expense. Expense is what we already discussed in the point number 10. So the difference of revenue and expense will be income. So income is different from revenue. And what is revenue? Amount received from the sale of goods and services. So whatever the amount a producer is receiving on sale of goods and services is called revenue. And expenses we already discussed in the above slide, that is cost of goods sold. So whatever the goods are selling into the market, the cost on producing these goods is called cost of goods sold. So the difference of revenue and expense is called income, or we can say excess of revenue over income. Excess of revenue over expense is called income. So this is all about expense and income. Move to the next slide. Now next is profit. Profit is what? Excess of total revenue and total expenses of a business enterprises for an accounting period. Accounting period, I already told you in the starting of the introduction of accounting that we generally do the accounting of a business for 12 months. That is from 1st April to 31st March. So in an accounting period, that is a period of 12 months, when your total revenue exceeds your total expense, means when your total revenue over total expense, or when your total revenue is greater than your total expense, the difference will be considered as a profit. So the most important term here is total revenue and total expense. Is it clear to everyone? Make it clear that total revenue and total expenses. If total revenue is greater than total expense, then it is a profit. Is it clear? Now move to the point number 13, gain. It is a monetary benefit. Monetary benefit means the benefit which is in the terms of money, resulting from an event and transaction which is incidental to business. Means whatever the monetary benefit a firm is getting from such transaction which is related to business, such as sale of assets and winning a court case, is called as gain. Next, loss. Loss is just the opposite of profit, or we can say a vice versa of profit. Profit is when total revenue exceed total expense. But when total expense exceed total revenue, then it is considered as a loss. So profit and loss is related to total revenue and total expense. Move to the next slide. Now the most important term we generally used in the accounting terminology, that is called purchases and purchase return. So in point number 15, we'll discuss about the purchases. What do you mean by purchases here? The term purchases used only for the purchases of goods in which the business deal. So that is related to purchases of goods in which the purchase business deals, or we can say which are purchased not for resale. Let me differentiate here the difference between goods and assets. I already told you previously that asset means which are purchased not for resale, that is ultimately used in the production of goods and services in the business. But purchases here means the goods which are purchased for resale or for further production and after that for resale. So in case of manufacturing concern, purchases means acquiring of raw material and for the purpose of conversion into finished goods and then sale into the market. One more line I added here, that when you purchase the raw material for the purpose of conversion into finished goods and then sale, then it is a part of your purchases, because here you are purchasing raw material to convert into finished goods, and at the last when it is converted into finished goods or it gets converted into finished good, you have to sell into the market. So this is called purchase. But in case of trading concern, you need not to convert any goods. You directly purchase from the outside and again you have to sell to the ultimate consumer. So whereas in case of trading concern, those which are purchased for resale. So from the combined definition, we can say those goods which are purchased for resale purpose or in which the business regularly deals is called purchases. Now purchase return. Purchase return means when the purchased goods are returned to the supplier, and who is going to be returned, that is called consumer. Suppose if consumer is not satisfied with the purchases goods due to any reason, due to defective goods or due to excess prices charged or due to any other reasons, not satisfied with the quality of the goods, in that case thus consumer can return the goods to the supplier. For supplier it is considered as a purchase return. Now one more thing, it is also known as return outward. So purchase return is also called as return outward. So this is all about the purchases and purchase return. Rest we'll discuss in the next slide. Thank you so much.